Today, let's dive into the upcoming week for SoFi stock, exploring potential drivers of volatility, market influences, and key data points you need to stay informed. The week ahead is packed with crucial updates, so stick around to catch all the insights. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. This week promises to be highly eventful with multiple economic indicators and earnings reports set to shape market sentiment. On Monday, we kick things off with a technically driven day, reflecting on last week's performance and assessing the overall market trend. But the real action starts Tuesday with the release of the Producer Price Index, PPI, followed by the eagerly awaited Consumer Price Index, CPI, on Wednesday. These data points carry significant weight, especially since recent Federal Reserve signals have adjusted inflation estimates for 2025 from 2.1% to 2.5%. Naturally, all eyes will be on these figures, given their potential to disrupt markets. Adding to Wednesday's drama is the return of bank earnings. These reports are crucial because they not only reveal the financial health of major banks, but also offer insights into future economic conditions. The guidance provided during these earnings calls could significantly influence SoFi's stock performance, making midweek a particularly volatile time. On Thursday, we'll see retail sales figures, initial jobless claims, and commentary from a few Federal Reserve speakers, all of which can add to market fluctuations. Finally, Friday brings housing starts and building permits data, rounding off what's likely to be an intense week for traders and investors alike. SoFi finds itself at a critical juncture, trading below its 50-day moving average. While no major company-specific events are slated for the week, some investors believe SoFi is poised for a significant rally, citing historical trends. It's true that SoFi often experiences upward momentum leading into earnings, but this pattern doesn't always hold, especially given the stock's recent performance. Over the past month, SoFi has dropped about 10%, with last Friday's sell-off likely influenced by better-than-expected unemployment figures and non-farm payroll data. The market's reaction seems tied to fears that interest rate cuts may not arrive as soon as anticipated, a reasonable concern given the current economic resilience. The broader market's reaction to these dynamics could change drastically after Wednesday's CPI release. With 12.97% of SoFi's free float currently shorted, equivalent to about 138.32 million shares, the short interest remains notable. However, short activity last week was relatively muted, with only minor increases reported. This suggests that short sellers might be waiting for a catalyst, such as bank earnings or inflation data, to make their next move. Turning to options activity, there's considerable interest in SoFi, with a monthly chain suggesting potential recovery. Open interest levels show significant positions at strike prices ranging from $13 to $17. For example, there are 25,000 call options at $13, 29,000 at $12, and another 27,000 at $16. If SoFi's price manages to exceed the $15 strike, a gamma squeeze could come into play, leading to further upward momentum. However, market makers and shorts often manipulate prices to close just below key strike levels, which could dampen this rally. On the technical front, support levels at $14.11 and $13.11 will be critical early in the week. Resistance points to watch include $14.73 and $15.72, with the 50-day moving average currently sitting at $14.60. Historically, when SoFi closes below this level, it has experienced additional pullbacks of up to 20%. If the stock closes below the 50-day average for a second consecutive trading day, caution is advised, as the situation might resemble trying to catch a falling knife. Still, SoFi has a history of rapid rebounds, and if positive data emerges, the stock could recover quickly. The week's outcome largely hinges on CPI data. While some market participants anticipate a surge to $18 or even $20, this optimistic scenario seems less likely unless there's a significant positive surprise. If the CPI aligns with expectations, markets might react negatively, reinforcing the current consolidation trend for SoFi. Despite this, long-term believers in the company could view any dip as a buying opportunity. Additionally, it's worth noting that SoFi often receives updated analyst ratings in the weeks leading up to earnings. While these ratings sometimes seem random, they can impact the stock price depending on the price targets issued. Should new ratings emerge this week, they could provide further impetus for movement either upward or downward. To summarize, the coming week for SoFi and the broader market is packed with potential catalysts, from inflation data and bank earnings to retail sales and housing starts. With high short interest, active options trading, and key technical levels in focus, volatility is almost guaranteed. Whether you're holding, buying, or simply observing, stay informed and be prepared for anything. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.